Listen to me. If you are retired or about to retire, you need to wake up and pay attention, because what I am about to tell you could literally save you thousands, if not tens of thousands, of dollars in taxes. So many of you spend decades saving, investing, and stressing over whether you'll have enough money to enjoy your golden years. But then you retire, and suddenly a brand new fear creeps in: how am I going to pay taxes when I start pulling money out? You worry that every single dollar you harvest from your hard-earned investments is going to be chopped up by Uncle Sam. You think that earning money or selling stock always means handing over a massive check to the IRS. Well, stop right there. I want you to take a deep breath, because I have good news for you. There is a secret weapon sitting in the tax code that most people completely overlook. It is called the 0% long-term capital gains tax bracket, and if you know how to use it, it can change your financial life in retirement. Now, how does this work? Let's break it down simply. When you sell an asset that you've held in a taxable brokerage account, like individual stocks, mutual funds, or ETFs, that you've owned for more than 1 year, any profit you make is considered a long-term capital gain. Under standard tax rules, capital gains are taxed at 0%, 15%, or 20%. Most people just assume they'll automatically pay 15% or more. But here is the secret: if your taxable income stays under a certain threshold, your federal tax rate on those long-term profits is zero. Zip. Nada. For married couples filing jointly, you can have tens of thousands of dollars in taxable income, and when you add in the standard deduction, you can often realize close to $100,000 or more in total combined income and capital gains without paying a single penny in federal capital gains tax. For single filers, that threshold gives you a huge runway as well. Think about why this is such a powerful window of opportunity, especially for people in early retirement. Between the day you stop working and the day you are required to take required minimum distributions, RMDs, from your traditional 401k or IRA, or before your Social Security benefits fully kick in, your ordinary income might drop dramatically. You aren't receiving a paycheck anymore. That temporary dip in income isn't something to fear, it is a golden window. That is the exact moment when you can step up and execute what financial pros call tax gain harvesting. Instead of waiting for your investments to grow untouched while you panic about future taxes, you intentionally sell appreciated stock or funds up to the top of that 0% capital gains bracket. You lock in your profits tax-free. And do you know what the best part is? Unlike tax loss selling, where you have to wait 30 days to rebuy due to the wash sale rule, with capital gains, you can turn right around and reinvest that money into the exact same position or rebalance your portfolio. Why would you do that? Because by selling at 0% tax and buying right back in, you step up your cost basis. That means you reset the price tag Uncle Sam looks at in the future. So when you do need to pull out larger sums down the road, your taxable gains will be drastically lower, saving you a fortune when you're older. Now, let me give you a serious warning, because you cannot afford to mess this up. The 0% rate applies to your taxable income, which includes your ordinary income like pensions, interest, short-term gains, or traditional IRA withdrawals plus your capital gains. If your ordinary income already fills up your lower brackets, every dollar of capital gains that spills past the limit gets pushed into the 15% bracket. Furthermore, you have to be mindful of how capital gains might affect your Medicare premiums or the taxation of your Social Security. That is why you cannot do this blindly. You need to pull out your tax returns, look at your numbers, and work with a qualified tax professional or financial planner who understands retirement tax engineering. Don't let fear keep you frozen, and don't let ignorance drain your nest egg. You work too hard for your money, now make sure you keep every single dollar you deserve.